Hi everyone, Michael here from my Street Luck. The Dhandho Investor. Fantastic book. Now we are at the chapter 10 and the summary of chapter 10. Dhandho 301. Few bets, big bets, infrequent bets. Okay, this chapter I would say is really important because you have to understand Kelly's formula. I'll explain. And also about the impacts that events can have on a stock investment and how you should look at it from the long-term view rather than a short-term view. So, and also about how ways of placing bets. And also, Monish Pabra mentioned that investment is something like gambling. And if you know how to place the odds well, if you know the odds are against not against you, and you know that you can make it well, you can do it. That's how it works. All right. So let's get started. Okay. The wise ones bet heavily when the world offers them that opportunity. They bet big when they have the odds, and the rest of the time they don't. It's just that simple. Charlie Munger said this. So, to be a good capital allocator, you have to think probabilistically. In investing, there is no such thing as a sure bet. Even the most blue chip business on the planet has a probability of not being in business tomorrow. Fulbright. One other question in all this is when you find a special situation and you decide, just for illustration, that you can buy for $10 and it's worth $30 and you take a position, and then you cannot realize it until a lot of other people decide it is worth $30. How is that process brought about by advertising, or what happens? What causes a cheap stock to find its value? This have been asked to Benjamin Graham, and this is what he replied. That is one of the mysteries of our business, and it is a mystery to me as well as to everybody else. But we know from experience that eventually the market catches up with value. It's in the long term. Yeah. So you can see this chart and how the DJI declines and subsequent performance after crisis events like major crises like fall of France, Korean War, US bombs Cambodia, and you can see after some time they increased. They got back to normal. So these kind of events are just a short-term shock. That's all. And they all led to big instantaneous drops as panic and fear set in. Over time, as rationality prevailed, prices did recover to more rational levels. So let's look at the American Express salad oil crisis. You gotta check back a Buffett partnership letters, you'll understand better. So Buffett invested 49% of Buffett partnership's assets into American Express, which was hit hard by the salad oil crisis, cutting half the stock price. Half the stock price. Buffett noticed that the intrinsic value of the company is higher and he placed the largest bet. Buffett generated 3 or 4 bagger return over 3 years. Dhandho is all about placing few bets, big bets, infrequent bets, and the Kelly formula supports this hypothesis. This approach works exceedingly well in making passive investments in the stock market. Kelly formula suggests the maximum bet we ought to make. It optimizes the time it takes a bettor to reach our wealth goals. At Pabrai Funds, Monish adjusts for this by simply placing bets at 10% of assets for each bet. Investing is just like gambling. It's all about the odds. Looking out for mispriced betting opportunities and betting heavily when the odds are overwhelmingly in your favor is the ticket to wealth. So hit it when it's right in front of you. Just hit it and hit it strong, hit it hard. That's the idea of this chapter. So can't wait for the next one, and thanks a lot. Thank you. Do like my sweet luck, do follow, and do leave comments, do give suggestions and feedbacks, and do discuss. All right, thank you. Thanks a lot. I wish you my sweet luck.